Ken McElroy has come out with his 2023 real estate predictions. Millennial Mike was gracious enough to watch the video and really highlight his Ken McElroy's four predictions. I thought I would take a chance to react, see where I agree and maybe where I disagree with Mr. Ken McElroy. Thanks, Mike.
Yeah, no problem. Yeah, so for this one, as Mike just said, we like to react to all things real estate. People send Mike videos or me videos or talk about videos that they want Zuber to react to. And so if you ever find something that you're curious as to what the big dog's thoughts would be, just send it my way. I will clip it down or cut it up so that we can get his response. So in this case, yeah, it's Ken McElroy. So Mike, if you're ready, we'll jump right in.
Yeah, I like it. Let's do it.
There's four things that I've studied a lot to try to figure out where things are going to be in 2023, because I, like you, want to buy real estate. I'm a real estate investor. I do not believe that inflation will be any lower than 4% in 1 year from today. I do believe, as we just saw in the chart before this, that the federal funds rate will continue to rise and will be well over 5% in 2023. I do believe that real estate values are going to continue to drop. We've already seen single-family housing drop, as I've talked about in my prior videos. We are now seeing commercial values drop as we start to see cap rates increase and interest rates increase as buyers are able to pay less to the sellers of many of these big commercial projects. And the last one is this lag effect that I think is going to continue into 2024. So the real question is, how long will it take for these interest rate increases to lower the inflation rate? And that, of course, is found in what I call the lag effect.
Yeah, so Mike, when I watch this video from Ken, there's been times when you disagree with him on some things. He's made some very interesting predictions in the past. This one I actually thought kind of sounded a lot like you.
Yeah, I think there's a couple of subtleties because I do watch Ken's stuff. I respect Ken. I appreciate that Ken's a multifamily investor. He is not a single family. So I've had some pretty strong disagreements with his single family predictions. We'll leave it at that. But let me kind of go through these. So first and foremost, I agree. I don't see inflation, and let's be very clear, CPI headline inflation going sub 4%. I believe inflation CPI headline has three components: the easy, the hard, and the really, really hard. I think we accomplish the easy and the hard next year, but the really, really hard doesn't happen. So I agree there. Number two, he talks about the federal funds rate being well over 5% next year. I believe Kenny is wrong. I don't know what well over is. I can't see going above 5 to 5.25. That's the high end. I actually think it will be 4.75 to 5. That's kind of my range. When I hear well over, I think 6. I think Ken is wrong there, but we'll see. Right? Again, this is all about probabilities, no certainties at all. Then he talks about real estate prices. I think it was really interesting how we framed that. He talked about single family going down and then commercials coming. Kenny, you and I both know commercial is in a lot of pain today.
Yeah.
There's a lot of bridge debt, a lot of value add opportunities that are blowing up. You have construction loans that are blowing up higher. You have supply chain. The pain in commercial today dwarfs single family. Mm-hmm. Now, it is fair to say that the multifamily market is a much smaller market, but the pain level is going up and will only increase. Mm-hmm. I believe the single family market will be flat, boring. Commercial, there could be 15, 20, 25, 30% haircuts coming to operators. I believe when we step back in 2026 or 2027, it will be a commercial real estate pain. So I think Kenny was underplaying the pain levels and maybe even reversing them. Maybe because he doesn't want to call out his brothers and sisters in the game, but I think commercial is worse. And then he's absolutely right, the lag effect. I think I watched the video as well, right? He dropped a pebble in the pond and the rings, concentric circles and all that.
Right.
That's actually why I think the easy and hard inflation takes a while, right? The easy will be done in Q1. The hard is in Q3. Then we see what's what with the really, really hard. So I think he's generally speaking on board. The one that I guess I disagree with was number 2. I don't see the federal funds rate going well over 5%. Other than that, I think he and I are in alignment, but I don't see it well over 5%.
So I have a follow-up question about the first thing you talked about, which was inflation.
Yeah.
And he said it's not going to come down under 4%, which you've talked about too, some of it being much harder to get rid of. I think
Yeah.
it was George Gammon I watched a video on recently, where he talked about what is considered normal inflation changing. So even I remember back to economics class, in 2008, 2007, and we talked about how 2% is the target rate of inflation. In this video, I believe it was George Gammon. If I'm wrong, I'm sorry. He was talking about how maybe they will have to change because that last bit of inflation will be so difficult that we will just accept 4% or 5% as the new current standard. Do you see that ever happening? Could that be something that's real?
Could it happen? Absolutely. But let's kind of step back, right? First off, there's nothing magical about 2%. It's not written down anywhere. It's not carved in stone. It's just a number that the Fed and really the U.S. financial system has said at this level is healthy. Because again, we are the reserve currency of the world. So you can't have inflation at some crazy number because it becomes too difficult to manage for other countries, right? A lot of emerging markets have dollarized debt, and they just couldn't handle it if we had runaway inflation at 8% forever. It would blow up the dollar. So there's a lot of people looking at this saying the Fed could get to their target by just closing their eyes and saying, okay, it's not 2 anymore, it's 3. I believe that's lazy. I believe the Fed, could they do that? Absolutely. But it would only be after kicking and screaming and beating this for years to come. I think a lot of people are still stuck on the Fed pivot. They want the Fed to stop. They want this. They want the pain to be over. So they're creating possible scenarios, which again, they could go to 3% or 3.5% or 4%. Who knows? I don't think it's probable, at least in the short term being 2023. I believe it's going to suck. We're going to be stuck in mud for a year or 2 years. It's how you pay the price for the stupidity we did the last 2 years.
Right. Well, the good news is that I use inflation to get rich because of real estate. So whatever happens, I'm going to be just fine. But Mike, we do have more videos that we need to react to. So let's go ahead and see folks in the next video series.
Thanks, buddy.